Hey everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 14th of the month, February 14th, Valentine's Day. Yeah, you don't want to forget that. So make sure, if you've forgotten about Valentine's Day or if you're too absorbed into the charts and the markets, you might want to head out and maybe grab some flowers or something for your significant other. But as always, before we jump on in, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From there, you'll be able to sign up for our newsletter so you'll be notified every time one of these videos comes out via email. Inside that newsletter, we go over all kinds of different stuff that we can't fit in the video. We just don't have enough time. Everything from stocks, crypto, I mean, you name it. If it moves, it'll show up in there at some point. So make sure to sign up for that if you haven't done so already. Of course, also click on the Live Trader subscription and trial info where you can sign up for a free 3-day trial on the Live Trader and check us out for a couple days and get your feet a little bit wet, see how we trade, how we approach the markets, and just kind of a general good inside look in terms of what we do every day for trading. So if you haven't done so already, make sure to sign up for that trial and get an inside scoop into what we do. So first of all, well, the euro has had some follow through. We finally have the buyers showing up to the party. Now, this is something that we've been looking for a while. You know, we came down to the lows here and the buyers nowhere to be found. We saw a really big bull bar, but then nothing after, right? Nothing happened after the buyers showed up and came back down. We were talking about how we want to see a little bit more from the buyers, right? Prove to us that you want to show up. Give us a double bounce, something like that with a higher low that we can look for potential buying movement. And that's exactly what they gave us. We finally had a strong bull bounce right there. Last night we were talking about how we wanted to see a little bit more follow through. At that point in time, I believe we were recording right around that bull candle there. And we finally have that follow through. The sellers tried fading the highs of that, and that eventually just failed. And we broke out again back to the upside. And here we are sitting above that big 23,695 level. Sorry about the roller coaster. 23,695 area. We're above that now. Now, we haven't really broken above it by much. I mean, you'll notice if we zoom in close here, these candles have barely left a little bit of separation inside there. That's not the separation we want. We want to see it get away from that level and then come back to get it, just to kind of prove that they are actually breaking out. Now, we have closed above it several times, so closing above it, technically speaking, some traders might consider that broken, but, you know, I want to see some distance from that level. So, in my mind, we're still potentially stuck around there. That may mean that we end up pulling back a little bit and retesting the bottom of that rising support. But for the most part, we do see signs that the buyers are trying to take over. All of the big levels of resistance, the moving averages, the previous support and resistance structure, I mean, everything is kind of out of the way now. So we have a little bit more clear sailing towards the upside. And assumably, the buyers are going to continue this rally to the upside with the primary objective going back up towards those highs, that high zone from highs to high closes in that area. If you cut it in half, it's 25,625, which is what the primary objective is. Now, are they going to hit that tomorrow? Probably not. That's a big move for one day, but that is a multi-day objective to the upside, and the buyers definitely look like they're here to stay. I wouldn't necessarily mind seeing them come back just for a quick little tap of that previous range high that they formed, that range inside of here, breaking out, pulling back, and bouncing. That would look very nice for continuation of the upside, but so far, it seems like it is buy side only on the euro at the moment. Over on gold, we're still seeing that same bull flag hold true. They just keep kind of narrowing down. Gold, oh man, gold was a little bit of a train wreck today in terms of price action, and we're just getting kind of more of that. We have an ascending wedge. It's getting narrower and narrower and narrower and narrower, and eventually they're just going to run out of room. Something has to give. Now, we are breaking above that level of resistance. Well, it was a resistance at 27.5, and you'll notice what happened here. We broke above that level. They used it as support. The market couldn't close back below it, and that's showing that the buyers do want to at least give it a shot. It's obvious that they're buying those dips. They're not really buying above candles for rips higher, but they are buying the dips at least, so we're seeing a good amount of bullishness still trying to come in. I can't get over the fact that while we have a blow off on the bottom of the channel, we're likely going to see a blow off on the highs of that channel, and that's the anticipation. So because of that being the anticipation, looking for the market to want to continue that swoop, catch it back up to the upside, and overshoot the highs of that downward channel. Primary price objective is going to be up towards probably this kind of cluster area of support and resistance through here. Lots of bouncing inside of that level, and that puts a level of interest, I would say, at around 44 to 45. That's going to be that zone where we're kind of looking for the market to rise up to after a blow off above that channel top. And then over on crude oil was, oh man, the first the first 5 minutes of crude oil were an absolute mess. I don't think anybody had fun trading the first 20, 30 minutes or so of crude oil. Once we finally started getting some movement, it picked up a little bit, but man, crude was slow today out the gate from 9 o'clock. We're still hovering around that same level of support, 59.07. We can't get through that level one way or another. The sellers can't drive through it, and as soon as they do break underneath it, the market pops right back up again, and there we are sitting right around 59.07, and that's kind of looking like where we're going to close out the day. So we're stuck right now. The sellers are having a hard time pushing it down. The buyers are having a hard time pushing it up. It looks more like we're just going into that wider range. Something we were talking about in the index markets. Wasn't necessarily anticipating this coming into the to the oil market, but does look like we have a range forming here, and, well, we're near the bottom with a bearish sentiment. So not really much that we can do right now. Really, what we're looking to do in a bear sentimented range is sell above the highs, and that means that we're looking for selling up here, and, well, we're not even close to that yet. So in the overnight session, anticipating maybe a slight correction back to the highs of the range, but as long as we're stuck around this 59.07, we might just have a hard time. So right now on crude, I think it's best just to sit on hands until we get a little bit more price action, price movement, gives us something to work with, and maybe then we can look for a possible trade plan. And then the S&P. The S&P is seeing a little bit of bouncing back and forth. We're still inside of that larger range and still kind of grinding higher. The range low still looks good, 58.25, range high at 703.5. We haven't even tested either side. We barely moved at all today, actually. Today's movement was very lackluster. We didn't get a whole lot done. And I say lackluster compared to, you know, the multiple 100-point moves that we've seen so far. It's actually probably nearer to a normal day of price action on the S&P, but it seems slow compared to what the market has been giving us. So the overall movement, you know, anticipating continuation to the upside. I would love to see them go back up to 27.03.5, find some resistance from that area, and then push the market back down again with the buyers trying to break above it, failing, and getting that second leg down. Now, again, the second leg I'm referring to the daily chart, where when we zoom out, it looks really good to see a deeper continuation and another leg down in terms of price structure. That said, from a buy standpoint of, say, Goldman Sachs, this is a beautiful pullback. I mean, you're talking an area of potential buying that we're not going to see again for a very long period of time. And if we measure towards the highs, all the way down to the lowest point, it pulled back a little over 10%. And 10% is a pretty hot spot number in a very strong trend. So, going 12%, honestly, it just looks like they dipped underneath the 10% and accumulation hit the books hard. For me personally, I would still like to see a secondary leg, but we know that a lot of big money is probably buying into those dips down here below 25.58 quarter, and they probably own quite a few contracts when it made its way down below 10%. Right now, I think we're just kind of stuck in a range, and we're waiting for a little more information. Looking at the faster time frame, 4-hour chart, we haven't reached the highs, we haven't reached the lows. We're not really in an actionable point right now. Zooming in really, really close, it looks like maybe this might be a bull flag for a breakout, but I mean, I think that's really kind of digging for patterns that might not even be there. So at this point in time, I think the S&P is in the same boat as crude oil. We're just waiting for more information. So that's going to do it for the Outlook video. As always, if you have any questions, feel free to send me an email, jbrink@slingshotfutures.com. Hopefully you found it useful, entertaining, something you can add to your tool belt. And like we always say, make a plan, trade the plan, follow those rules, and you'll do just fine. Until next time, we'll see you all then.